Welcome back. Going straight to Andrew Holland from Avendus. Andrew, good afternoon, and thank you so much for waiting patiently to chat with us. Always love chatting with you. Andrew, what's your take on India market valuations? Almost every global brokerage of repute is calling it expensive. You've seen it for such a long time. How are you coping?
Yeah, I think we're all coping with trying to cope with the valuations that we see. I think there's a few things here. One is that yes, I agree that valuations are expensive compared to historical standards. But I think the slight different way of looking, and I'm not trying to justify the views at all, is that going forward, there's going to be certain sectors within that within the kind of say Nifty, which will continue to do well. And obviously, when you get new listings coming in, the kind of the whole kind of shape of how you should be looking at valuations will change over time. So, for example, if you took the last bull market, the market was on a very low PE, but it was kind of the index was full of constituents which were more manufacturing and commodities, which obviously have a very much lower PE anyway. Whereas now you have a lot more growth companies in the index. So I think we have to live with the fact that valuations will be higher going forward. But that said, if you take, I can give you an example of what I mean. Is that if you take the kind of the whole financial sector, then whilst we usually would tend to go to the private banks, which we still like, but within the financials now, there's a whole kind of new theme playing through insurance and asset management. Which is probably where you're going to make more money going forward than you would maybe in traditional banks at this stage. So I think there's money to be made within the markets. You might not see the markets going to move gradually so quickly that we've seen in the past, and obviously we're still going to be hostage to kind of global factors as well. But I think that's the way I think about valuations at the moment.
Right. Andrew, you run country's largest long-short fund. So what's your long percentage right now versus short in this market?
Yeah, so we actually have a hedge of around 65% at the moment, but that would be sectors which we believe may underperform. Some of those outperforming sectors. So there's many sectors which are under pressure as well for many different reasons. So you might say, well, in the past month, kind of the oil and gas stocks would be something which, you'd be more long on, whereas banking, which is still struggling, the banking sector as a whole, we've seen that underperformance, right? So those are the kind of things you can do within a long short fund.
In fact, in the last a few minutes, financials have taken a knock once again. US market futures are down too. How are you reading the tea leaves as far as this overseas cues are concerned and its impact on emerging market, particularly India, because we have gone ahead of ourselves a bit, according to some?
So if I just look outside, there's so many problems out there. Going across each of the kind of places. In the US has its own problems with inflation. The infrastructure bill looks as though it's going to be taking a lot longer and maybe a lot smaller than people expected. And there's debate around whether the Fed chairman, given the kind of share dealings that some of his members of the committee have been doing, will be there this time in February. So all of those things are playing out for the US. In the UK and Europe, whichever way I look at it, the energy prices and the amount of money that people have to spend on new energy costs will take away some of that spending, which everyone was hoping for as the economies reopen. And then, of course, China has its own problems anyway. So for India, when you look at the oil price of 80, and I've seen forecasts out there for 100, we can't fight this. Inflation is going to be a factor for India. So, we'll all be listening to the RBI to see if the words are a bit more dovish. But one thing for sure is that with China slowing, and China is slowing very quickly, the global economy is going to fall short of growth expectations, and that has to have an impact on corporate earnings. And I'd be interested to see the corporate earnings season, not just in India, but globally, to see what the commentary or hear what the commentary is regarding one, demand. Is it starting to kind of wane a bit because of consumer not spending as much? But more importantly, how are all the kind of problems of shortages or of supply problems hurting their margins? Are they able to pass it on, or are they taking a margin hit, and what's the outlook? And I think that's going to be what the market's going to be worrying about over the next few weeks as results come out and as companies start to comment on their outlook. So that could bring a lot more volatility to markets. But guess what? Our markets have been ignoring all of that. The sheer weight of money, the sheer weight of people's the retail investors coming into not just through SIPs, but coming into new fund offerings has been huge. And they have to put money into work. Right? You can't sit on cash. So the mutual fund industry is putting money into work in the markets.
True. Who would have thought that the Indian SIP itself could be a 10,000 crore flow every month, irrespective of where the market is. Anyways, Andrew, how are you reading the signs, early signs for the second quarter numbers, the way a clutch of consumer companies, a clutch of lenders have put out their second quarter update? Bajaj Finance was very strong, and so was Godrej and Marico. Does it tell anything about the quality of the earnings which lie ahead?
I don't think it does. You see, you're looking through the rearview mirror, right? And we knew the economy was picking up. And obviously, these companies which you've mentioned, top of the league within their own sectors, right? So they're bound to do well. I said, I think the commentary about how they see, particularly in the manufacturing sectors, how they see those input prices or shortages impacting their ability to, one, pass it on. And if they can't pass it on, what's going to happen to margins? And I think that's the key I'd be looking for. But certain sectors are going to continue to do well if the government starts spending on infrastructure and your housing real estate market starting to pick up as well. Then all the material stocks are going to enjoy continued higher kind of revenue growth. But the question is, again, because your input prices, can they really pass that on? And if they do, let's just say everyone can pass everything on, that's great news, right? But it can't be good for inflation. So at some point, the RBI will have to tighten. I don't think it's this year, it's probably next year, but the market's probably not prepared for that right at this moment.
Right. And in fact, that was my second question. What would you watch out for from the Monetary Policy Committee outcome? Last time round, I really loved that line which one of the RBI official, if not the governor, I think said that back home in India, we don't like any tantrums. And we would like to do whatever we would do in a glide path manner, indicating that they wouldn't want the market to get taper tantrum here in India.
Yeah, so I mean, hopefully that won't be the case, but I mean, the markets will not like the fact that yields will be going higher in terms of what could that have an impact in terms of again growth in terms of the real estate market. We're more paying higher EMIs, but to be honest, I don't think it's going to make that much of a big difference because of where India is in terms of its reopening. So I don't see a hawkish signal from the RBI. Yes, it will be negatively taken by the markets, possibly depending on how it says it. But I don't think a gradual rise in interest rates here is really going to have a big impact in the kind of short to medium term in terms of the growth of the economy. I think because a lot of corporates have done a lot of restructuring of the balance sheets, it's less of a problem in terms of kind of interest payments. I think the problem globally is that every country is or central bank has printed a lot of money, and debt levels have more than doubled over the last year or so. So that's a bigger worry for the bond markets in those developed markets than it is in India.
Andrew, we'll let you go on that one. Thanks so much for your time. Have a great day ahead.
Pleasure. Thank you.